All right. So, of course, today we had a rally fueled by Meta and Microsoft and their results yesterday. We had big gains across the board, particularly in the AI trade. And then tonight we got Apple and Amazon with some disappointments. Tomorrow we get the April jobs report, which will be very interesting. Economists expecting employment growth to decelerate from March. Will the data help keep today's rally going? Will it save the markets? Will it put more pressure on it? Because one could argue that today's after-hours earnings will put pressure on that rally that we saw in today's session.
Well, it's also interesting because today they're not related. This jobs data is numbers from last month. Today we had a more concurrent number in initial jobless claims, and they jumped. Significantly higher. It's, as I always point out, it's a noisy data series, which means you can have a lot of volatility in there. But jobless claims have really been holding up. So, and if you remember, that payroll number last month was a bit of a relief to a market that was a little bit concerned about growth. So tomorrow's number is big. I think if you saw a really weak number, that Treasury bond yield, which was a lot higher 3 weeks ago, might get a lot lower.
When I came earlier today, Rory McIlroy was here.
Love Rory.
Earlier to the NASDAQ.
To the NASDAQ. Yes, here. I pointed to being interviewed by Andrew Ross Sorkin. It made me think of the great sport of golf. And the front nine today was great. The back nine, not so much. I mean, we gave a lot back in that back nine. You like what I did there? And tomorrow is sort of the final round of the week.
So a day in the market's like a round of golf.
Today it was, Tim.
That was just during the session, but the after-hour session would be.
I don't know. Maybe it's a practice session. I'm not sure.
I mean,
don't hold me all these things.
It's time to drink.
Yeah.
Is that your assessment?
This is the 19th hole. I think that the important thing is the 2-year yields keep going lower. 10-year yields are stuck here, and oil's in free fall. It all is messaging a certain thing.
Is bad news on the jobs front good news?
I don't think
the Fed has indicated that it's more willing to come in if jobs soften.
Okay, that's fine. But we just got, if you looked at GDP print, the inflation component was hot. The other component was soft. The final piece to the stagflation puzzle is jobs. If jobs is weak, that's problematic to me.
Yeah, well, I think if jobs are weak, it's going to be a bad day. I think you have a growth scare is a lot worse than an inflation scare. And I'm not worried about the Fed on inflation. I'm worried about growth. And I'm worried about the Fed that has to step in here for that. Stocks are not priced for recession. I think they've done a good job of navigating the murkiness, but not priced for recession.